We are going to continue our discussion in Chapter 1. This time we are going to be doing number 4 and 5, describe the content and purpose of each of the financial statements, explain the meaning of assets, liability, and stockholders' equity, and state the basic accounting equation. We've talked about before the forms of a business organization, the sole proprietorship, partnership, and corporation. We've talked about the users and uses of financial information, the 3 types of business activities, and now we're going to talk about communicating with the users. Assets, liabilities, expenses, and revenues are of interest to users of accounting information. This information is arranged in the format of 4 different financial statements, which form the backbone of the financial accounting. To present a picture at a point in time of what your business owns, its assets, and what it owes, its liabilities, you prepare a balance sheet. To show how successfully your business performed during a period of time, you report its revenue and expenses in an income statement. To include how much of previous income was distributed to you and the other owners of your business in the form of dividends and how much was retained in the business to allow for future growth, you present a retained earnings statement. To show where your business obtained cash during a period of time and how that cash was used, you use a statement of cash flows. The first statement that we're going to talk about is the income statement. The income statement reports the success or failure of the company's operations for a period of time. As you notice, in the 3-line title, every statement has a 3-line title, it will say for the month ended October 31. You will figure out the net income by subtracting your expenses from your revenue. That is the net income. If it's a net loss, then your expenses would be bigger. And then there are 2 ways you could do that. You could put a minus in front of it, but usually you put parentheses around the total at the bottom right here, and you would say net loss. Investors are interested in a company's past net income because it provides useful information for predicting future net income. Creditors also use the income statement to predict future earnings. When a bank loans money to a company, it believes that it will be repaid in the future. Amounts received from issuing stock are not revenues, and amounts paid out as dividends are not expenses, so they are not going to be on the income statement. The income statement and retained earnings statement are interrelated because you're going to use the net income from your income statement to put in your retained earnings statement. If a business is profitable at the end of each period, it must decide what portion of profits to pay to shareholders in dividends. In theory, it could pay all of its current period profits, but few companies do this. Why? Because they want to retain part of the profits to allow for further expansion. High-growth companies such as Google and Cisco Systems often pay no dividends. Retained earnings is the net income retained in the corporation. The retained earnings statement shows the amounts and causes of changes in retained earnings during the period. As you can see, the time period is for a period of time, not a specific date, and then users can evaluate dividend payment practices from analyzing the retained earnings statement. Some investors seek companies such as Dow Chemical that have a history of paying high dividends. Other investors seek companies' growth instead of paying dividends. Lenders monitor the corporation customers' dividend payments because any money paid in dividends reduces a company's ability to repay its debt. The next statement is the balance sheet. We need the retained earnings statement when figuring out the balance sheet to make sure our assets equal liabilities plus owner's equity. The balance sheet reports assets and claims to asset at a specific point in time. As you can see, there's a specific date there. The balance sheet also shows that assets equal liabilities plus stockholders' equity. We list our assets first, then the liabilities and stockholders' equity. Notice common stock and retained earnings are in our stockholders' equity. Again, something very important for you to remember is that assets always equal liabilities plus owner's equity. Creditors analyze a company's balance sheet to determine the likelihood that they will be repaid. They carefully evaluate the nature of the company's assets and liabilities. The balance sheet will be used to determine whether cash on hand is sufficient for immediate cash needs. The balance sheet will also be used to evaluate the relationship between debt and stockholders' equity to determine whether the company has a satisfactory proportion of debt in common stock financing. Our last statement we're going to talk about today is statement of cash flows. And you can see how these two are interrelated, the balance sheet and statement of cash flows, because your cash balance should be the same as your cash at the end of the period. The primary purpose of a statement of cash flows is to provide financial information about the cash receipts and cash payments of a business for a specific period of time. Notice it does say for month ended. To help investors, creditors, and others in their analysis of a company's cash position, the statement of cash flows represents the cash effects of a company's operating, you can see, investing, and financing activities. In addition, the statement shows the net increase or decrease in cash during the period and the amount of cash at the end of the period. Users are interested in the statement of cash flows because they want to know what is happening to a company's most important resource, and remember that is cash. In operating, the statement of cash flows will provide answers to these simple but important questions. Here they are. Where did the cash come from during the period? What was cash used during the period? How was cash used during the period? And what was the change in the cash balance during the period? Those are the three important questions that it will answer. We're going to do this problem. It says CSU Corporation began operations on January 1, 2012. The following information is available for SCU Corporation on December 31. I think I need to change that, don't I? December 31, 2012. Sorry, those should be the same. First, you need to know the classification of each of these accounts. Accounts receivable is an asset. Assets go on the balance sheet. Accounts payable, remember any payable account is a liability. Liabilities go on the balance sheet. Building rental expense is an expense. It will go on the income statement. Expenses and revenue go on the income statement. Notes payable, payable is a liability, so it will go on the balance sheet. Remember it has that accounting equation, assets equal liabilities plus stockholders' equity. Common stock is stockholders' equity, so it will go on the balance sheet. Retained earnings is going to go on the retained earnings statement. Equipment is an asset, go on the balance sheet. Insurance expense, be an expense, it'll go on the income statement. Service revenue, it'll go on the income statement because you have income and expenses, or revenue and expenses. Supplies is an asset, assets go on the balance sheet. Supplies expense, expenses go on the income statement. Cash is an asset, so it will go on the balance sheet. And then dividends are going to go on the retained earnings statement. It says prepare an income statement, a retained earnings statement, and a balance sheet. Every statement has a 3-line title. For the income statement, it's for a period of time. We always start out with revenues on the income statement. We only had one, the service revenue. Then we will list our expenses. The rent expense, insurance expense, and supplies expense. Total expenses were $10,200. And then we'll find out if we have a net income or net loss. You subtract. Take your revenue minus your expenses. Since your revenue is bigger, we will have a net income. We put the double rule to show that we are finished with this document. Our next one is the retained earnings statement. Again, it's for a period of time. We'll list our retained earnings. It was 0. We add our net income from the income statement. Those two added together are $6,800. We take out the dividends, which is what we pay to our stockholders. So our retained earnings for December 31 is $6,200. We'll need this for our balance sheet. On the balance sheet, it's a 3-line heading with a specific date. The balance sheet has a specific date. All the others are for a period of time. We list our assets first. We said we had cash, accounts receivable, supplies, and equipment, with our total assets at $23,200. The next part of the equation are liabilities and stockholders' equity. Assets equal liabilities and stockholders' equity. Liabilities, our notes payable was $5,000, accounts payable $2,000, so our total liabilities were $7,000. Stockholders' equity, we have our common stock and retained earnings, which we got from the statement. Our total stockholders' equity is $16,200. When we add the two together, it's $23,200. So our assets equal our assets equal liabilities and stockholders' equity. This is your assignment. After this PowerPoint, brief exercises and exercises to complete are BE1-8, E1-15, and E1-16.